First take here on News 9 Live. I'm Krishna Kumar and joining me in the studio is my colleague and friend Amit Ranjan. We begin by understanding how Indian markets are opening. Indian markets expected to open on a flat to positive note, and that's because of continuing rise on Wall Street. Bear in mind, Wall Street rising for 3 consecutive sessions with the hopes of a possible rate cut continuing over there amongst traders due to the softer than expected US jobs data. So Wall Street on a high, Dow, S&P, Nasdaq, all the major indices in the US up anywhere between 0.5% to over 1%. And there you go on your screens. S&P up over 1%, Nasdaq up over 1%, Dow Jones up nearly 0.5%, and Asian markets too tracking those gains, barring Hong Kong's Hang Seng, Japan's Nikkei too up in early trade today. So that's how the global markets have set the stage. Let's take a look at how Indian markets are faring this morning. Expected to open on a flat to positive note. Nifty there up 0.1% in the green. Sensex unchanged at 0%, 73,900 below the crucial 7,400 mark. Nifty continuing to be below the 22,500 mark as well. Mid cap and the small cap opening in the red barely flat on a flattish note, but in the red. So that's how the Indian markets have opened at 9:30 a.m. This morning, and we have to understand how the markets will trade for the rest of the day. Bear in mind, it was a very choppy, volatile session of trade yesterday, and the choppiness and the volatility is expected to continue as well because of the season we are in. We are in election season. Lots of questions on which direction markets will head once elections come to a close. So let's first put things into perspective. We have Soni Patnaik, Assistant Vice President, Derivative Research at JM Financial, now joining us on First Take. Soni, thank you so much for taking time out to be with us. Tell us about those levels, for the Nifty and the Sensex. Sensex continue to be below the 74K mark and the Nifty below the 22,500 mark.
Good morning, Krishna. Thank you so much for having me on the show. So if we talk about Nifty, Nifty is pretty much in a very broad range of 22,350 to 22,600, 22,800 when the series had begun. As of now, there's a very strong resistance around 22,600, 22,650, and there was a lot of call writing witnessed yesterday in options chain. Any short covering in Nifty can only be seen once these resistance is taken out, that is 22,600, 650, that resistance zone has to be taken out. Then only we can see short covering and Nifty can retest its all-time highs, but that looks quite difficult because a lot of fresh positions on the short side got added yesterday, approx to the tune of 5% odd. On the downside, 22,350 holds as a crucial important support. If it breaks, it can test 22,270, 22,280 on intraday basis, and any break or any close below these levels, the entire range for Nifty can come down closer to 22,100 to 22,400, 22,500. So that has to be a bit of a caution note. India VIX is rising to 16.6. Of course, it happens on a, it just happens before the elections, and that may just indicate that there can be a lot of volatile swings until the event is over. So if we talk about Bank Nifty, on the other hand, Bank Nifty, 48,500 acts as to be a very crucial support. So as long as 48,500 is not breaking, Bank Nifty may remain sideways between 48,500 to 49,300. Short covering for Bank Nifty can only be seen above 49,300, but as of now with the data, it all seems to be a bit on a caution note, and you can see a lot of volatile intraday swings.
Right. Along with the Nifty and Sensex, one thing that we are keeping a track of is where the Bank Nifty is headed. So much pressure on the banking pack, specifically when it comes to PSU banks. Tell us, what are your views on the Bank Nifty?
So Bank Nifty, just as we discussed, 48,500 approaches to be a very strong support. If that breaks, you can see continued further downside for Bank Nifty towards 47,800, 47,600. On the upside, 49,000, 49,300 continues to act as a resistance. So any form of short covering in Bank Nifty can only be seen above 49,300. Until then, until it hasn't happened or it hasn't broken either side of the levels, then you may see more of a sideways trend in Bank Nifty. But either side of the range has to break for further determination of trend.
All right, so that's where the Bank Nifty is headed. Let's also now bring in some stock-specific action. Amit, you have a stock like Deepak Nitrite, which has surged to 2-year highs on the back of a double upgrade as well.
a double upgrade by Morgan Stanley to overweight from underweight. Morgan Stanley has also upgraded the price target for Deepak Nitrite to 2,985. It is around the 2,550 levels as we speak. Slightly down today. The revised price target implies that the potential upside of 22% from Friday's closing levels. Now, Deepak Nitrite, if we look at its peers, Sony, over the last 6 months also, it has, apart from Linde India and Godrej Industries, it has done better. They performed better than Pidilite Industries, SRF, Gujarat Fluororock, all of them. Do you see it peaking, or is there steam left in the stock for investors to come in right now?
So if you look at from a derivative and technical chart perspective, it has given a monthly breakout. It's quite important for Deepak Nitrite to continue trading above 2550 and close even above it on a monthly basis. Then it can get confirmed that it can head to higher towards 2800, of course. So markets quite being very volatile, it may get a bit difficult. But then the support immediately to watch out for a medium term perspective comes out to be around 2400. Now if 2400 breaks in the medium term, then it will get difficult and it may retest to slow support levels of 2200 on a medium term basis. So very important that the monthly break closing gets above 2550. It confirms that the monthly breakout is intact and it can head higher.
Okay. Sorry, there's another stock that who announced their results yesterday, and that is CG Power. There was a 10% dip in their net profits, even though revenues rose in double digits, around 17%. Now, this is primarily due to higher expenses. If we look at the peers, it is up. The stock is up over 6% today, and if we compare it to its peers, it has not done too badly over the last 1 year. Where do you see CG Power going from here? They have made forays into new sectors over the last few months also.
So CG Power, of course, today on charts, it has given a good breakout above 560, 565 can be seen. It is packed with good volumes and that remains a good support for now. If 560, 565 holds as a good support, then of course it can try to test higher levels of 600. So this can be just a near-term base. Can be seen on weekly charts also. It has given that breakout above 560, 65. So in any case, that range, that support is very important for the stock to hold at least on a weekly basis and give a closing above it for it to retest or head higher towards 600 levels.
Another company that announced their results is a consumer major, Godrej Consumer Products. Now the stock is up over 7% despite them announcing a loss of over 1800 crores year on year in the quarter gone by. What explains that? It is in the FMCG sector, which is struggling due to lack of rural demand.
Yeah, I'm sorry I won't be able to discuss on the stock. It is in a research restriction list.
All right, fair enough. We will be keeping track of the Godrej consumer stock per se. But going forward, there is so much talk of the volatility and the choppiness in the trading session, because we're in the middle of election season. So tell us in terms of, for the retail investor, when they look at the broader markets and they look at the global picture, how is one supposed to read the market levels?
So, just going ahead, it's very important that one may trade with maybe sort of a hedging position, at least form some sort of caution as the events are not over. Like I've already discussed on the levels, 22,600, 650 remains as a very strong near-term crucial support, and any form of short covering can only be seen above those levels. Until that is not taken out, so just maintain a hedged position, hedge strategy, as you can see a lot of volatile swings coming in before the event gets over.
Okay, and quickly, Sony, if you can tell us your stock picks for the day's trading session.
So the first pick would be from ITC, looking quite strong on intraday charts, has given a good breakout also, keeping a stop loss of 435 and a target of 460 can be seen in ITC. It's come out after a long time. It has given a good breakout with volumes and adding fresh positions as well. The second pick would be a sell pick in UPL. We've seen a good breakdown happening from yesterday, in fact, and the stock has given a breakdown below 500. So since yesterday it's looking quite weak, it can retest lower support levels of 450 as the target, keeping a stop loss of 505 can be sell in UPL. The third pick is in Jubilant Foods. It's a bull call spread in Jubilant Food. The overall idea for Jubilant Food to give a bull call of 480 call option buying and a selling of 500 call option is that the stock has formed a good support around 450, 460, and it can test the higher levels of 500. So the spread can be initiated at a cost of 5 rupees 40 paise at a total combined premium, and the entire target can be looked at anywhere between 10,000 to 12,000, provided that the view is right and Jubilant Food can test 500, 505 levels. So I think that's the level where you can book out the profit from the bull call spread.
All right, then we leave it at that. Sony Patnaik of JM Financial, thank you so much for taking time to be with us on this edition of First Take. We are taking a very short breather here. We'll be back with more market action on the other side. Don't go anywhere.
It's probably the best kept secret in India.
Family-owned business, which has been extremely clinical in their approach. They have not hesitated ever to kill their darlings.
Typical to a South Indian business empire, I think they've shunned the limelight almost deliberately.
Film and entertainment is definitely one of the levers for any country to build its brand.
We are getting global. I feel that we're just on the takeoff.
More and more films are becoming language agnostic.
Content is a universal language.
There's one audience in the world.
Absolutely. End of the day, we all are like brothers who have mutual respect for each other from a different land.
Watch Allu Arjun on Duologues with Barundas. Streaming on News 9 Plus.
India produces between 1,500 and 2,000 films every year, the highest for any country. But they get ignored at international awards.
The Oscars are basically American national awards for themselves.
You're not going to be able to make a better pizza than an Italian chef. You're not going to be able to make a better sushi than a Japanese chef. Will you make better khichdi than a Japanese chef? Right? So I want you to taste my food. We are making cinema that we are proud of.
In fact, it has been 2 decades since an Indian feature film featured in the Oscars International Film category.
All these years, for much of its history, they've been just awarding their own films, and this one tiny category, Best Foreign Language Film, had the entire world frothing at the mouth to get into the Oscars.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
How do you fulfill that promise? Because ultimately expectations have to be met. If you look at the political landscape, is it really changing for women? And what is the inability of the forces that dead bodies surface but not the living people?
Why is the state not looking at putting an embargo on that?
As a Telangana person, I will not accept.
How do ordinary folks deal with this?
You're watching First Take. I'm Krishna Kumar, and we are tracking all the market action here. And markets in India have opened in a flat note, but trading marginally in the red. There you go. That's the mood check at 10 a.m. this morning. Nifty, Sensex, all in the red. Nifty mid cap and small cap, all in the red, but only marginally in the red. A lot of choppiness continuing from yesterday's trading session into this morning's trading session as well. Nifty just above the 22,400 mark. Sensex continuing below the 74K mark. So the market's opening on a flattish note this morning. Not much that we can see at this stage. We have Rohit Srivastav, founder, market strategist, India Charts, joining us on this edition of First Take. Rohit, how does one read the markets? If you were to look at the charts right now, they're all in the red, but they're all marginally in the red. Lots of talk about choppiness and volatility reigning supreme.
Yeah, so we have good support coming in close to 23.14, 23.50, in that range. And I think somewhere the market most likely will take that support and start heading higher. So it's going to take a little bit of patience. What is important is to see what has changed globally in the last 1 week, because most world markets have actually recovered from the lows that they were actually seeing in late April and early May. Our market too did that. It's just pulling back. So for example, we had hit a low of 21,777, which is below the 22,000 mark, and then we rebounded all the way to 22,794. So that's almost a 1,000-point jump we'd seen in a very short period of time, and now we sort of retraced say 50% of that. So I think it's a good retracement. It's a good build up to what comes next, which is as we get closer to the election. I think there will be what we usually see is an election rally, and the environment has actually gotten better on the global markets place because especially after last week's Federal Reserve meeting that sets the stage for easy liquidity, that I think we have a setup for a market advance. So I think this pullback is just temporary, but should get bought into, and we should be heading higher soon.
Okay, pullback is temporary. You're talking about the global factors at play over here. Wall Street has had 3 sessions up and up in the green. Lots of expectations of a possible rate cut after the softer than expected US jobs data. Except for the US Federal Reserve, everybody else seems to be talking about a rate cut on Wall Street. Tell us, from the way, and you're seeing that enthusiasm on Wall Street rubbing off on Asian markets as well.
Yeah, see, this talk about rate cuts has been there since the start of the year, because the Fed itself has given that as an outlook, right? What they said is we will start rate cuts in 2024. So that sort of gave a timeline that, it's going to happen for sure. The only thing, the betting game has shifted between whether it's 6, whether it's 5, whether it's 3 and 2. But so what the Fed has done in this particular meeting, which is making people confident of it, is that while they were not able to cut rates immediately, they have reversed the quantitative tightening program. So that is a big step in a direction telling you that, see, we are serious about getting this done. But we can't do the rate thing right now as bond yields have risen in the last quarter. But let us at least reverse quantitative tightening, because that is sort of creating a lot of pressure on the bond market, right? So somewhere they need to start buying, supporting those bonds. One of the ways they are doing that is the Treasury is doing a bond buyback up to $2 billion a week, starting from somewhere in later in June. All the way into July, and so that will be a significant liquidity provider. So basically, what we are saying in short is liquidity conditions have eased, and that is good. That is why you're seeing European markets pick up, US markets pick up. Indian markets, like I said, after a 1,000-point pop, is just giving back some of those gains, but should eventually align with what is happening globally on the rate front.
All right, so that's the overall view. But how do you read what's happening with commodities, namely gold and crude?
No, so here's the direct rub off. Like, moment we talk of an easy monetary policy from the US side, we talk of a falling dollar. And when the dollar starts falling, you find commodity prices going up. So part of the commodity rally is, I think, an advance bet on the idea that rate cuts are coming. So people started to bet on that, I think, from Feb or March itself, and you started this commodity rally where gold and silver have actually ended up hitting new highs. I think in the last 2 days they've pulled back and taken support at some very interesting levels. For example, gold at around 2270, and silver at around 26.20. I think those were good supports from where they've bounced back. Possibly the gold and silver rally should resume. We should see them head higher. Or alternately, you see some more consolidation. You can say, okay, we've had a good run up, we will consolidate some more. But medium to longer term, over a 3-month period, I do think commodity prices are going to be higher. In the very short term, it's possible, some things, for example, copper has gone up a lot. It's moved, significantly in one direction, all the way from 3.6 to 4.6. That's almost a point. So you can't rule out that, copper will consolidate, maybe even pull back to a 4.3 at some point of time, but eventually head higher. So it's a good time to get a pullback. But some of them, like oil, have already seen a pullback, right? So oil, we've seen a pretty steep cut. I don't think oil should fall any further below, $77. Most probably the recent low we made around 77.90, 77.80 should be a bottom. Possibly oil prices also start rising from here. So that is something we'll watch out for.
Okay, fair enough. Would it be then safe to assume that, going forward, at least in the near term, for the next few weeks, it's going to be stock-specific action on India's markets?
So we've always seen a lot of rotation. I think that's been part of the play over the last 3 months. We were anticipating some kind of correction, but what ended up happening is a correction in specific stocks at specific points of time. So, for example, we were discussing metals. Can we expect the metal sector to correct because they've already moved up? Maybe. But on the other hand, because banking has not performed and they've been under pressure, it's a good time to expect that banking stocks pick up. So that kind of rotation is going to happen. You're seeing that even in FMCG, for example, a sector which was down for the entire quarter is actually seeing some positive momentum, seeing that in chemicals and so on. So I think there will be rotation. PSU stocks have had a one-way run. They may still participate, but possibly the ones that have run up one way see a pullback. The ones which have been down bounce back, and that rotation can make you feel that it's a stock-specific gain. But it's essentially sector rotation that has become part and parcel of our market behavior, I think, over the last couple of years.
Okay, you're talking about sector. I'm going to pick up on one of the sectors that you're talking about. That's FMCG. Godrej Consumer Products, a player in the FMCG space, came out with results, not great results, but the stock continuing to do very well.
Yeah, it's well. I don't really track the stock in particular, but what I can see is that it has gone past the previous highs, so that is interesting, which was at around 1320. That can set the stage for a fresh move higher. So we will see whether it can hold above 1320 or not.
Okay, let me pick up another sector that I want to talk about, and that's the pharma sector, the pharma space over there. You have a big results that's expected from Dr. Reddy's coming in from the pharma space. Talk to us about Dr. Reddy's as well as and of course the pharma space. Amit, you have the numbers on Dr. Reddy's.
Yeah, the pharma giant Dr. Reddy's is due to announce their results today. Their net profits is expected, according to market analysts, to rise as much as 35%, revenues to rise almost 14% year on year. Now, the pharmaceutical industry, I'll come to that first. It's around 50 billion right now, due to cross 65 billion this year, projected to cross 130 billion by the year 2030. Now, India is a major exporter of pharmaceuticals, exporting to over 200 countries. But what we have seen with Dr. Reddy's and the pharma space is they have had pricing pressure when it comes to the US market, which is one of the biggest market. But the domestic sales have more than made up for it. Rohit, will it be this way, that it will be the domestic market that will be shoring up the pharma sector in the near term, given the geopolitics that is happening around the globe?
No, I think it's going to be a mix of both. I think we shouldn't completely write off, the demand for generics and, the global demand for cheaper medicines, which was sort of the theme. There are companies operating in that space, and I don't think that will go away. But the domestic market also is a good place. I mean, if we can see a growth in, say, the hospital sector, then why wouldn't it be there in domestic pharmaceuticals as well? So I think both are in interesting place. Both participants are likely to gain. What is more important is from a valuation perspective, the pharma sector, because it's been through multiple corrections. Initially a 4-year correction all the way into the lows of 2020, and then another 1-year correction between 21-22. The valuations are actually much lower than some of the other growth segments. So even if you compare it to FMCG, I would find pharma far more attractive, because they are at the bottom end of the valuations compared to the FMCG giants. And so in that sense, it's a very, very interesting place to be. In fact, I wrote a post, and not really making a recommendation here, but I wrote a post on Dr. Reddy's yesterday, simply plotting the EV by EBITDA on a 15-year basis, and you actually find it closer to less than -1 standard deviation in terms of its valuation range. So that is sort of at the bottom end of its 10-year valuation range, even though prices are moving up. So that's just to give you a sense of where valuations are for pharma stocks, because they've sort of been ignored for a while, and so that creates a very good trade.
All right, that's the view on the pharma space. We'll continue discussing that and more in just a short while from now. We're taking a very short breather. We'll be back with more market action on the other side.
India's ever-evolving urban landscape is witnessing a new revolution. And this one comes on four wheels.
The affluence has been growing. Cars are becoming more a reflection of what you are.
Nobody's talking about hatchbacks. Now what next? The next is the SUV.
The contribution of SUVs is close to 55-60% of the automobile sales these days.
Is that even manufacturers like to sell SUVs?
So, how did a nation obsessed with fuel economy come to love heavy gas-guzzling sports utility vehicles? Let's look at how India fell in love with the SUV.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
You're watching First Take here on News 9 Live. I'm Krishna Kumar. We're continuing to discuss the pharma space. Bear in mind, Dr. Reddy's is expected to come out with its results today. And on that note, Amit, lots to talk about the pharma space.
Yeah, pharmaceuticals, and Rohit, I'll come to you on this also. Pharmaceuticals has been one of the focus sectors of the government given the PLI schemes and the amount of incentives they've given towards the transfer of APIs to India, primarily from China. Nifty Pharma over the last 1 year has grown around 50%. Like you said, do you see a big rally round the corner post-elections with the new budget coming in?
Put it this way, the pharma sector has already been undergoing a rally, and most probably that rally would continue. That is, I think, the way to look at it. So it's not likely to stop right here, right away. Some of these stocks, for example, if I think of Sun Pharma, it has actually been through a correction from 1600 down to 1400, which then puts it at somewhere at the monthly support levels and so on. So there may be some rotation within the pharma stocks also, but overall, I think if I look at the pharma index, we should look for a continuation of the current move or the current pace of advance even into 2024, 2025.
Okay, that's as far as the pharma space is concerned. We're looking at all the gainers and losers, losing sectors in trade this morning. Nifty Bank continuing to be in the red, IT in the red, Nifty Auto in the red, Metal Pack in the red, private banks in the red, media in the red, pharma too marginally in the red. I want to pick your brain specifically on the Nifty banking pack. The PSU banking pack strangely is flat to in the green at this stage. How do you see the banking pack trading going forward?
No, I think banks are due to make a comeback. In fact, PSU banks have been the only ones running. So when I say make a comeback, I'm actually referring to the non-PSU banks which have not been participating in a big way. When we look at, say, the Bank Nifty, for example, it has been zigzagging in a range for more than a year. I think that phase has sort of come to an end. We are at the point where you will see participation coming back into banking stocks, the way you're actually seeing bad news get discounted. Like in the last 2 days, you can actually see a Kotak Bank trying to rebound, which is interesting. You're also seeing something similar, a lot of bad news around HDFC Bank, which are, I think, the two weakest spots inside the private banking space, which has sort of, I think, now absorbed a lot of bad news. So usually when a lot of bad news has already come in, that's when we can sort of start saying that, okay, now have you really discounted a lot of the bad news? So I think the private banks start getting attention again. Even the NBFCs, which were probably under some stress because of various announcements coming out of RBI, I think that also sort of gets discounted. So it's time to actually look at financials outside PSU banks also. That's where I think the surprises on the upside could actually show up.
All right. So as far as the banking pack is concerned, any other sector that is grabbing your attention at this stage, Rohit?
No, I think we have sort of spotted the places that need to be looked at. Others which were actually doing well, I think autos are an interesting one. Because even though the auto index may have looked like it's doing well, we didn't have broad participation. For example, you've just seen Ashok Leyland suddenly break out to a new all-time high. Things like that, actually good signals of longer term trends continuing and emerging more strongly in favor of certain stocks that were not participating earlier. So I think autos being interest rate sensitive, since we actually spoke about the rate cycle at the beginning, interest rate sensitive sectors that benefit from lower rates would actually get attention, is what I think.
All right, interest rate sensitive sectors. And how do you see, rates in India panning out? It's not the same case, there's going to be a rate cut in the US, we're going to see a corresponding rate cut in India. Indian central bank being very clear about, managing inflation. And in that sense, how is the Indian market perceiving the rates in India?
So Indian bond yields were under pressure, but I think RBI has managed pretty well that they don't go above 7.2%. So if you actually look at the entire pattern of the 10-year GSEC bond yield from 2022 to date, they've actually made lower tops. Like we were at 7.6% in June of 22, then we reached 7.5, then 7.47, then more recently 7.35 in October of last year. And now in the last month, we went up only to 7.26. So we've been making consistently lower highs, but not breaking out on the upside. So that is interesting. I was actually scared if we break out on the upside, that would have posed a risk to, in terms of interest rates in India. Now what we need to watch out for is, do yields actually drop below 7%? Because once they do, then we can persistently go into a lower interest rate environment in India as well. So I think that is what will be the trigger. Once we see rates on the 10-year fall below 7%, you will see a lot of money get into interest rate sensitives, which I was just speaking about.
Rohit, there was one sector that I wanted to ask you on. FMCG has been a laggard. Now we are expecting a good monsoon this year. What is your view on this sector? A lot has been written and said about, but it has been a laggard.
Yeah, so it's sold off. It's gotten very oversold near term. So there is a buying opportunity. But like I said, if I have to choose between defensive sectors and I put valuation as an overlay, I will definitely like pharma over FMCG. So that is just my take on what I would prefer. But in terms of trade setup, once you see the correction, I think in FMCG is probably over. So you will see a pickup, which you're seeing sort of today. Some of the top gainers are FMCG stocks. Yeah, I just have the sense that from a portfolio perspective, I would prefer more pharma over FMCG.
Okay, and another sector that's been doing really well and seems to be nothing stopping it is the realty pack. Are you expecting an even further rally in the realty pack post-elections?
It looks like the realty stocks have held up. It would have been nice to see a decent, slightly deeper correction given the sharp run-up. Doesn't seem to have happened yet. So if that does happen, it would be a even better opportunity to get into the realty cycle. But I don't think the cycle has ended. So that is definitely not the case. I was hoping, though, that we will see some kind of a pullback before they head higher. That's the only thing. Looking at things like the weekly momentum, for example, does have some kind of divergences and potential for weakness. But so far, when we look at the daily charts, we don't really see any reversal yet.
All right, no reversals as yet is the word coming from Rohit Srivastava, founder and market strategist at India Charts. Rohit, thank you so much for taking time out to be with us on this edition of First Take. And with that, we've completely run out of time here on the show. Thank you so much for watching. We're taking a break here at this stage. We'll be back with World Business Report on the other side. Don't go anywhere. Keep it with News9 Live.
India produces between 1,500 and 2,000 films every year, the highest for any country. But they get ignored at international awards.
The Oscars are basically American national awards for themselves.